traders, I'm looking at gold here on the 4-hour time frame. Interesting price action. I'm just going to go quickly out to the daily and I'll show you what I've been marking up here. All right, daily time frame. Okay, this is bullish. We've got this break of structure right here, as you can see there. And I'm looking for an entry point, but not at the current high. If you have a look at these levels, okay, so we've got, let me just grab that. This level in here has been taken out. This is pushed through with a vengeance and has hit the stops that are sitting above here. Big liquidity. So I'm just wondering how far this pulls back after reaching into this level here. My target, the draw on liquidity, is going to be up in here, the next draw on liquidity on the daily time frame. So with this kind of price action, I believe this is reaching for that. It's hit these stops. And the question is, you know, how far does this pull back? Now, I'm looking for an entry point through here, and we'll go down to the time frame and I'll give you my take on how I'm looking to get involved. So, bullish price action, there'll be a target at this high, but this is a target here, and then we've got another target sitting up in here that I've marked up as a level of interest. All right, daily time frame. So that's the story there. Chart's marked up. We'll go down to the 4-hour. And what we've got on this time frame is, well, in fact, I'll go down to a 1-hour because I want to show you this green zone that I've marked up here. And then we've got this green zone down in here. In fact, we can pull the whole high to low with this red candle where the accumulation occurred, pushed off. And then we had a bit more of an accumulation in here, rallied. All right, now the thing with this, given that we're trading into this level here, guys, this is big liquidity all through here. We'll just call it a liquidity zone, something like that. Where are we? Liquidity, there you go. All right, buy stops resting up in here, being hit with a vengeance. 4-hour time frame, we're starting to see some pin bars on the candles. We do have under here a significant imbalance on the 4-hour through this this candle here. There's nothing left and right of it between this range, and we also have another imbalance down in here with this thin candle that could be a target. So I would expect price to look to rebalance at some stage, and that would be definitely a level of interest. Don't underestimate how far this thing can pull back, by the way. Look at these retraces or these moves here. Okay, really significant price ranges from high to low. Look at that. Okay, so don't underestimate how far this thing can move. It can get pretty volatile and aggressive when it's looking for stops. Now we've got the daily time frame. I forgot to mention a couple of things. Quickly we'll go out and then we'll work our way down looking for an entry point. This is this previous day high down in here that I've marked up as a level of interest. Coincides with that imbalance. Now the other level that I've marked up is this PDA previous daily high right here, level of interest, right? So I'm thinking, if this is a trend bullish, that might stay intact. We rally and then pull back into possibly the 50 to 61.8 discount fib zone, potentially, all right, for an opportunity. So back to the 4H. If that's the case, okay, I'm going to be looking for this price action to play out. So we got swing low, swing high, a little bit of a retrace, not much. Swing low, swing high. But I'm thinking, yeah, well, guys, you know, there's a couple of things that are really concerning me about this is, whoops, hang on. Is this imbalance under here? Oh, hang on a minute. There. All right. This green zone and this imbalance under would be combined a fairly significant target for this thing to pull back into, for one thing. All right, so I'm thinking, if anything, I'm going to pull a fib from the swing low from this red candle to the high and call that one price swing. The retrace, see the 50% on the Fibonacci? All right, 50% here, 61.8 here, imbalance, and it works beautifully with this imbalance. Swing low, swing high. This is accumulation, rallies, retraces, and that is your discount area down in here. So I'm thinking a buy, a long position midway through the imbalance, or even at the high of the, even at the 50% pullback. This is speculation. I would have no hesitation setting up a buy limit. All right, stop loss under this candle low here. Let's see this one. And that's a target up in here, this level up in here that I marked up earlier. That gives you a 4.5R outcome. That's nice. So that's one idea. That's speculation, higher risk. Now, the way that, you really would want to get involved with this would be, let me just show you this. Let's just have a look at this rotation. Right, so I'm always looking for how this thing rotates. And then we'll mark that up as a point of interest for an entry. Now, chart's marked up, so now we go down to the 30. And I want to have a look at, see this. This is my strategy. Swing low, swing high, and then I'm looking for, it's got to go through the 50% Fibonacci retrace. Now, we'll have a look at this back down in here, and then we'll go to our current price. So Fibonacci low to high here. See this? I'll just circle it. Right, that's a point of interest if I'm speculating. All right, now you could set up a limit by speculating there, and of course, look at the risk involved. Watch this. It trades all the way through, all the way down, practically, well, right down to the pip more or less, to this level here. Now your stop is going to be under the previous low, so you got away with it, right? But let's have a look and see on the 15-minute chart how we get involved with this and we avoid getting taken out if we're in front of the chart. Now, if you're not in front of the chart, then it's going to be speculation, set and forget, and you understand the risk. So we'll have a look at these 2 points of interest. Just going to grab a smiley because I want to look at that. And well, we know what we're going to be looking at this as well. So we'll go back to this first smiley on the 15. And then we'll work our way to the current time. Yeah, this. All right. See on the 15-minute time frame how we have. Take that out. We know that's our level of interest up in here. This was the 50% pullback right there. Okay, there's our 50. This is what we're looking for. We want to get involved here, but how do we get involved? See, here's the thing. What we've got here is lower low, higher high, but it doesn't follow through. Doesn't follow through. That's what happened. I'm looking for the rotation. So there's no rotation in there. It happens. And I draw this in every video I do. I'm always looking for this. Well, volatility, but a bit of a range. More of a spike down would be better, but takes off, hits stops, and then we start to see that. Higher highs, higher lows. This is your break of market structure entry point on that pullback. Fibonacci, low to high, retrace, entry. And that gets you in. Now, we don't see higher high. Well, we see higher high here, higher low here. Okay, it's starting to kick in. All right, so you could have, yeah, but we got lower high. So you want to wait for this break of market structure. No, that's what I'm getting at. If you're in front of the chart. Again, if you're not in front of the chart, then it's speculation on the fib retrace and understand the risk. So here, look, this is what I'm looking for. Speculation, you can set this buy, limit buy down in here, set and forget and walk away from it, go to the wherever you're going. But if you're in front of your chart, and I'd be watching this into the London Open or the New York Open, I'm not buying here. This is buying at a premium. It's overextended. We've got an imbalance. We've got this value area. That's my target level. But what I want to see more importantly is price to come down, wiggle around, preferably something like that, right? So what we're getting is a range. Just grab that. We're getting the range, the fakey shaky chart pattern. This is the only chart pattern I'll look at, by the way. And then we start to see higher highs, higher lows. All right, and that's how you get involved. 15-minute, 5-minute. That's a bit fast, but 15-minute. You know, and we pick this rotation. Now this can happen down in here, or here. Or we might get a dip, but wherever this plays out, this is where you look to get long. Wherever it plays out, guys. At the moment, I'm going to be interested in this level. And if it continues lower lows, lower highs, well, forget about it until we see the break of market structure bullish. And more importantly, you want to look left and see where there's liquidity left. Let me just, I got a lot of drawings on here. See this zone in here. There's liquidity under here. All right, so what I'm getting at is, see how we have this value area. Okay, dollar signs under her. This is a liquidity zone. The stop loss is resting under this. See how this comes down and takes out these stops, and then you see it break to the upside. That's your opportunity. If it continues down, it's the liquidity under this zone here that could be, right, the next port of call. I hope you understand what I'm saying. So look left for these liquidity zones under a value area, and if your higher highs, higher lows kick off here, you're in. If it continues down and it hits this liquidity under here, right, it hits it here, and then we see high highs, that's your entry point. Well, your cue to go long. Guys, I'm giving you my trading secrets here. This is how I trade. This is it. Not my concepts. I'm influenced by ICT, have been since 2016. So, yeah, I mean, I've got my own version or my own language or my take on ICT concepts, but and I really want to try to simplify. I don't want to make this complicated. Just simple language. That's what I'm looking for, and I'll call it quits at that, guys. I think that's a lot of information. Look, hope you've enjoyed the video. I'd love you to comment down below. And with that, hope you have a great day, safe trading, and we'll see you in the next one.